Bloomberg Audio Studios.
Podcasts, radio, news.
It's been more than 3 years since China Evergrande Group collapsed and sent a shockwave through the country's property market.
Evergrande shares down about 30% this week alone. That's, of course, a stock that's lost more than 90% of its value since the peak.
The authorities are trying to ring-fence this situation at Evergrande. We know it is the most indebted developer in the world. You know, there's concern that you miss these payments, there could be cross-default.
The stunning fall of one of the country's largest builders marked the beginning of a property slump that continues to drag down the Chinese economy today.
Chinese property crisis will probably not be resolved anytime soon.
Real estate has gone down. Stocks have gone down. Salaries have gone down.
China's real estate market was once valued at more than $50 trillion and made up a full quarter of the economy. But now, more than 3 years later, the housing crisis doesn't seem to be getting any better. All across China, tens of millions of newly built apartments lie vacant. Developers are struggling to finish construction, and homeowners are watching their property values plummet. All of this is putting the central and local governments under immense pressure to turn the property market around.
So the big question is, where are we in this property crisis? And what has been done, and is it working?
Lulu Chen is Bloomberg's editor for Asia Finance and Investing.
And I would say that Xi Jinping and his government came up with this miracle pill, which is that they are going to let the local governments buy the unsold inventory, excess inventory, and convert it into affordable housing. Now, in theory, great idea, but on the ground, it's running into all kinds of challenges.
Welcome to the Big Take Asia from Bloomberg News. I'm Oanh Ha. Every week, we take you inside some of the world's biggest and most powerful economies and the markets, tycoons, and businesses that drive this ever-shifting region. Today on the show, China's housing rescue plan. What is the Chinese government doing to save the property market? Is it working? And what's at stake if it fails? To take a closer look at what exactly the Chinese government has tried to do to boost the housing market, Lulu and other Bloomberg reporters decided to focus in on a city called Zhengzhou.
Zhengzhou is ground zero for China's housing crisis. It was one of the first few cities that saw its real estate market crash. It was at the center of the mortgage boycotts, if you remember a few years back, when people refused to pay their mortgages because the developers were not able to finish the construction on the houses that they already pre-sold.
Zhengzhou is a city of about 12 million people. It's located in the Yellow River Valley in the heartland of China.
It's the capital of Henan province, and that used to be one of the nation's poorest provinces. Zhengzhou these days is most famous for being home to the largest iPhone factory, Foxconn. They have their largest factory there.
The arrival of factories supporting Foxconn and the EV maker BYD kicked off a period of rapid growth in the city, and new residential communities sprouted up.
Before the market crashed, Zhengzhou was super ambitious. They wanted to attract talent and investment. They wanted to become a financial center, a logistics hub, technology hub, and they even built this massive artificial lake and man-made financial island.
But Lulu says even in the early days, there were signals that Zhengzhou probably had overbuilt.
I was reporting a story about China's property bubble about 12 years ago, and we did look at Zhengzhou, and that was a place that back then already attracted a lot of skepticism. People were calling a ghost town, and even back then you could see construction everywhere and plots of fields being converted into land for real estate. Given how things have panned out, for sure, and I think like the skepticism of them being overreaching and taking on too much debt was evident even more than a decade ago.
Bloomberg reporters recently traveled to Zhengzhou, and Lulu says the city feels less of a ghost town these days, but it still looks like a gigantic construction site.
If you travel to Zhengzhou today, you would see the whole city just rife with half-finished projects, and government loans are having some effect. Cranes are whirring again, but it's still stacks and stacks of empty buildings, empty skyscrapers, and these massive boulevards with very few cars, lands that were slated for development sitting idle, so much so that locals have turned them into vegetable gardens.
In the decade through 2020, Zhengzhou's urban area more than doubled, but the population only grew less than 50%. And Lulu, why is it that Zhengzhou never realized its goals? Why can't it just build its way into prosperity?
Yeah, well, location. So Zhengzhou is in the heartland of China, and the context for their ambition is while they were plotting this out, there were 100 other cities who wanted to be the same. They all wanted to be technology hubs. They all wanted to be financial hubs. So think of Zhengzhou, but times it by dozens or even hundreds. And this was happening across China at the time.
And when the city government in Zhengzhou finally realized that they were in trouble in 2022, they sprang into action.
Zhengzhou threw everything on the wall after the property crisis happened. They've tried so many ideas that officials from other cities have been flocking there to study the model. They gave loans to developers, trying to help them complete and finish projects. They offered to buy surplus units and even subsidies payments to residents who would replace their outdated homes.
Zhengzhou's government purchased more than 100,000 unsold units from real estate developers. It didn't say how much money it spent, but local media Caixin reported the amount could be around 30 billion yuan, or about $4 billion. According to a state-backed magazine, about 3/4 of the funding comes from commercial bank loans, and the interest rate was only 3%. And what did they do with the properties that they bought?
They convert them into affordable housing, which is something that Xi has tried to champion. And these public units would be both for sale or for rent.
And how is that going?
Slowly. It's going slowly. I think on the rental front, they've made some progress in attracting more people. On the sales front, it seems that there's simply not enough demand where people are willing to buy public housing, even at such low prices, because of the belief that the prices are still going to drop.
In theory, it sounds like a great idea. By purchasing these apartments and converting them into public housing, the government is trying to kill two birds with one stone, to absorb the oversupply on the market and to answer President Xi's call to make housing more affordable. But Lulu says, in reality, there are a lot of challenges on the ground.
So something as specific as finding enough apartments that fit the criteria of what the government wants. Often they want to find entire apartment blocks of small units that can be converted into public housing. And that's a huge challenge in itself. They also need to access cheap financing to make money off of these projects. And then they have to persuade the developers to sell these apartments at steep discounts, which is another tension. Goldman Sachs estimates that a discount of 30% may be needed when they buy these properties from the developers. Huatai Securities was even more aggressive. They said that you need to mark down the property prices by 50% when they buy them from the developers.
Wow, that's quite a bit.
Yeah. So the developers aren't willing or simply can't afford to do this.
What the government ideally wants is that, in some ways, the developers, even though they're selling it for discount, they can at least,
offload the inventory since they're going to go belly up or get liquidated, restructured.
It sounds like the government has to jump through a lot of hoops to make that happen.
Yes.
And Lulu, is this strategy working in Zhengzhou?
I don't think it's working. Zhengzhou's property prices are still falling, and what's happening in Zhengzhou is very indicative of what's happening in the rest of China.
What is happening in the rest of China? What else is Beijing doing to shore up the property market? And can they succeed? That's after the break. China's property crisis has become a massive headache for the world's second largest economy. Across the country, there are tens of millions of unsold homes.
Yeah, so Bloomberg Economics estimates that the country has an inventory of about 5.2 billion square meters of unsold housing. It would be the equivalent of 60 million apartments.
60 million apartments. That's enough to house the entire population of France. Bloomberg Economics estimates that it would take more than 4 years to sell that inventory. That's assuming sales don't keep falling. Lulu, these numbers are staggering. What else is Beijing doing to support the property market?
Yeah, they've made it easier and cheaper for people to buy homes. They've lowered the existing mortgage rates, which would lessen the burden for homeowners. In addition, the government has been easing its monetary and fiscal policies since late September. And they've also provided lending to developers so they can finish approved projects. And this is what we commonly refer to as the whitelist. The goal for whitelist loans is to reach 4 trillion yuan, which would be about $550 billion by the end of 2024. That amount was more than 3 trillion yuan as of November.
That's a huge number. That's $500 billion US.
Yeah, that's one of the issues. And then the other thing is the whitelist loans only address the issue of finishing unbuilt projects, right? There's the other part of the issue, which is this excess supply of inventory. And unless the government can address this excess inventory issue, the prices are not going to rebound.
Even with the tons of money the central government is pouring into the market to turn the property crisis around, these fixes don't seem to be working so far. Used home prices have declined for 39 straight months through October, to a level about 30% below the July 2021 peak. Lulu says there's a perfect storm of structural issues that helps explain why the government isn't really seeing the results they're hoping for.
Demographic challenges, which means that people are aging, population is dropping, not enough demand. Also, the developers' persistent liquidity crunch, unfinished homes weighing on buyer confidence, and families stuck with this mindset that home prices won't rise. Xi Jinping has made it quite clear that he doesn't want housing as a speculative investment. With that kind of messaging, people are going to interpret that the overarching guidance is still that there is no upside in investing in real estate, and what would be the point in buying apartments?
Fundamentally, it all boils down to simple economics. There's too many apartments, and there's not enough people who want to buy them. And Lulu says if the government can't figure out a way to ease the crisis and stabilize the housing market, there could be even bigger consequences for the country.
At this moment, the property crisis is the greatest threat to China's economy. And to a certain extent, it's the government's own doing because their policy restrictions on developer leverage exacerbated and triggered this unfolding of the real estate sector that was already facing so many structural issues. You combine this with the job losses, youth unemployment, China's export challenges, Trump tariffs, and aging society where all these households are counting on real estate for about 80% of household wealth. And what you have there is the perfect storm.
This is the Big Take Asia from Bloomberg News. I'm Oanh Ha. Listen to our previous episode on China's real estate meltdown after the nation's biggest developer, Country Garden, defaulted, and how it upended hundreds of thousands of lives. You can find the link in the show notes. This episode was produced by Yang Yang, Naomi Ng, and Jessica Beck. It was mixed by Alex Sugiera and fact-checked by Adriana Tapia. It was edited by Caitlin Kenny and David Scanlon. Naomi Shaven is our senior producer. Elizabeth Ponso is our senior editor. Nicole Beamsterboer is our executive producer. And Sage Bauman is Bloomberg's head of podcasts. Please follow and review the Big Take Asia wherever you listen to podcasts. It really helps new listeners find the show. See you next time.